Hello, hello. Good afternoon, everybody. This is Mike Patel with Home Savvy Central, and welcome to my live show today. We have an exciting topic today, and we're going to discuss it pretty shortly. Let people join as we are just getting started. We have a topic that is very, very relevant, very important, and is going to change the trajectory of the real estate, what's happening already. So I'm looking forward to chat with you. If you have any questions while I'm chatting, or if you're not live and if you're watching this as a recording, a lot of my viewers watch this as a recording, make comments, ask questions. I'll be glad to answer all of you back. So here we go. Let me turn off the music. We don't need the music here. And I'm going to change the setting here. So what we're going to talk about today is the topic is you can't sell your home and you can't afford to move. So what's happening? Why is this happening? Is this happening to you only? Is it happening to a lot of people? And what's causing this fear where a lot of people have a lot of equity? Their home prices have gone up pretty high. At the same time, when they want to move, there is a resistance, or there is no way to move because there is no money to move, or they cannot qualify to move. So we're going to talk about those things, some important topics. So the question is, are you stuck in a situation like that? Or do you know someone that is stuck in a situation like this? Because it is very common. A lot of people don't mention it, but maybe you know somebody who is in this situation. So the big question is, why is the housing market frozen, or why is it freezing? And what does that mean for you specifically? Whether you're a seller, mostly I'm talking to sellers, but some of the sellers may want to buy. And a lot of the buyers today are not being able to afford homes. The prices have gone so high. The interest rates are gone too high. But more than that, the property taxes have skyrocketed and the insurance has skyrocketed when they buy a new house. So when the lender approves you, not only is the lender going to check your principal, interest, tax, and insurance, when he does that, those tax and insurance in the area, if it's too high, knocks you out. It's like you have an additional car payment. You already have two cars and you have your normal insurance and property tax, but with the increase in property tax and insurance, and of course HOA, if you have a house with an HOA, it's just like another one or two car payments, and with that you can't buy. So that's the situation we're going to have. So to get started, I wanted to look at some numbers so you understand what's happening in the market. I mentioned earlier that the market is freezing, or the market is frozen. So what's happening? And the best way is to share with you some website. And let me share that with you right now. Let's see. This is from Redfin. Work with the best agents in your neighborhood. We're not going to go there. This is a report that came out. When did this come out? Let me see here. It's pretty recent. I don't have a date. In May 2025. So this is very recent. And I'm going to get right into the supply and what's happening in the market. Let's look at the overview of what's happening nationwide. Right now, and let me see if you can see the screen. Yes, you can see the screen here. Let's look at the median sales price. Right now, as of May 2025, it's just under $450,000. In 2024, it was near about $400,000 to $420,000. So the home price has gone up 1% year over year. And this is the median sales price nationwide. Obviously, I'm in California, so our median price in Anaheim Hills is $1 million. In fact, I just wrote an offer, and I just got the news 2 minutes ago, just before this call, that our offer got accepted. The listing price was 1.1. It's a 4 bedrooms, 2 bath, 2,400 square feet. There were 10 offers on it. It was listed for 1.1. We wrote an offer for 1.2, 100,000 more, knowing that it's a very good house and there's going to be competition. We got a counter back, and we had to offer another $60,000, $70,000 on top of the $100,000 that we offered, and we got it. I can't tell you the exact price, but it's pretty high. It's almost $200,000 more, and The other critical thing is we have to remove all contingencies in 10 days, and we have to remove the loan contingency in 15 days. And they gave us 25 days to close. That's why they picked us. Our buyer is very strong. They're putting 20% down. They're going to close in 25 days. They already pre-approved. So the reason I gave you that example is that in certain areas, the market is very hot. But here's the reason I gave you that example. One is that the market is hot in some areas. Some areas it's very slow, like Florida, Texas, Arizona, oversupply. But the other reason I gave you is that a lot of the buyers who want to buy cannot afford it. Luckily, my buyers can afford it, even with the 7% interest rate, even with the $200,000 going over their approved limit. They were strong enough to buy because they have the help of their parents or brothers or uncles or whatever. So they have extra cash coming in. But at the same time, a lot of the buyers are not very lucky. I read a report. In fact, the report shows in my last live, I showed a screen that 60% of the households cannot afford or barely afford a home that's worth 300,000 or less. So the market is different. The market is changing. In California, Southern California, we have $1 million and they're selling over $200,000, as an example I just gave you. And then there's 60% of the households cannot afford a $300,000 house. So there's a big discrepancy, a big dilemma in the housing market. We have the highs and we have the lows. So let's look at going back to the report. It shows here that year over year, the price went up 1%. This is from 2024 May to May 2025. The number of homes sold was almost $475,000, which is down 6% from a year ago, comparing May to May. And then the national average 30-year fixed mortgage rate is still 6.8, pretty much zero change. I would say it dropped a little bit, but this is an average. So this gives you an idea of what's happening. Talking about the areas, let's talk about the 10 metros in the US with the fastest growing sales price. That means increasing. Baton Rouge, 33%. Rochester, New York, Honolulu, Baltimore, Montgomery, Alabama. They have increased by increase of 33% at the rate of increase, not the increase, but the rate of increase. And then the other 5 states are Pittsburgh, Detroit, Philadelphia, Birmingham, and Arlington. So let's look at the cities that has the slowest growth. The 10, let me see if you can see this here on the screen. Yeah. So the 10 most competitive cities in the US are Anchorage, Seattle, Tacoma, Richmond, San Francisco, Fort Wayne, Omaha, Sacramento, Arvada, Colorado, and Lakewood, Colorado. So you can see there's a lot of changes depending on the area. So the market is very hyper local. What's happening in Southern California may not be happening in Florida. In fact, opposite is happening in Florida. But I'll leave Florida alone. I talk about Florida all the time. So let's look at the other chart I want to show you is the housing supply. I mentioned earlier that the market is frozen, or what we call the market is paralyzed. And here are some stats, and this is from Redfin and Zillow reports. The median home price is $431. That is of March of 2025. Right now it's showing a $447 as of May. That means it has gone up. Home prices are up 1.5% month over month. That means if you compare April to May, it jumped 1.5% nationwide. But year over year, the average price is up 2.5%. So the home prices have been very high. They're still getting higher. That knocks out the buyers who want to buy because they can't qualify. So on one hand, the home prices are going up. Sellers are laughing. Sellers are happy. On the other hand, the supply of homes for sale is increasing because 2 things is happening. Number one, sellers want more money and they keep asking for more. So the more you ask, the less buyers you have. And then buyers at the same time, with so many increases, not only in property value and in taxes, because of the increase in insurance and taxes, they cannot qualify anymore. So if they were qualified for, let's say, $400,000 house, now they only qualify for $350,000. And as you know, if you're looking for a $400,000 house and then you have to buy something for $350,000, you're not going to like that house. So that's what's happening. The median days on the market, that means how long does it take to sell a home? It's around 38 days, which is higher than last year was 6. It was 32. And the months of supply, this is the big number we have to look at. That means how much time will it take to sell all the homes on the market? And right now, as you can see, there's about 2 million homes for sale, and that's 30% more than last year. That's a lot of homes for sale. So if no homes come on the market, it'll take 3 months to sell all these homes. That's called inventory. But as you know, every day new homes close and new ones come on the market. So it keeps going. But on average, the inventory has been going up. By the way, like I said, I mentioned earlier, if you have any comments or any questions, please answer those. I'll try to monitor and answer any questions that I can. At the same time, if I cannot answer it, I'll send you some resources. So let's go back to this chart. Like I was saying, the month supply is 3. Let's go back 5 years. In 2021, February 2021, the supply was around 1.3, which was very, very, very low. These are the COVID times, or just after COVID. Now, if you look at 2025, it has almost doubled. Of course, it's 2 million homes for sale. But if you look at the normal market, normal market, there used to be 3 or 4 million homes for sale. And right now it's 2 million. But forget what happened 20 years ago or 7 years ago. Let's look at what's happening right now. What's happening right now is home prices are increasing. I just showed you it's up 2.5% year over year. Inventory is going up. That means more homes are coming on the market. It's taking longer to sell, right? And then the number of sales, the number of home sales is down. Let's look at that, the demand. Let's see. Yeah, so the demand is low. That means less homes are selling this year. In 2025, there'll be less homes sold than 2024. So because of the high prices, because of the low inventory, in one way it's low inventory, and in one way it's high inventory. And it's kind of confusing because inventory is still low compared to the normal, but it's higher compared to last year. So I hope you understand that. So that's why we're calling it a frozen market. And the other thing that's happening is a lot of the seller, the golden cuff seller, the sellers who are the homeowners who have 2%, 3%, 4% are still hesitating to sell their home. Let's say if I have a 3%, which I do, there's no way, and I'm in California, so my prices are very high. I have a lot of equity in the home because the prices have doubled or tripled in the last 10, 11 years, or no, in the last 15 years, for me, at least in my house. But I'm not going to sell, because why am I going to sell at 3% and buy something at 7%? At the same time, if I buy something more, my property tax will go up, my insurance will go up, I have moving cost, I have to buy new furniture and fixtures, I have escrow fees, title fees, commissions to pay. I will lose $30, $40, $50, $60,000 in just moving and closing cost. So I'm very comfortable where I'm at, and that's one of the biggest reason we have a shortage of inventory. Like I said, we have a shortage of inventory, but the inventory is up from last year. So I hope you can make that distinction. So in other words, the buyers have more choice to find a home, right? And the sellers are still not putting their homes on the market. They're still sticking. At the same time, the sellers are not selling their home and buying another one. So there's a stall. In a way, we have a stall. So let's move on a little bit. So why are the buyers out of the market? So why is the market frozen? So here's one thing. So you may ask me, hey, Mike, you're saying that the inventory is up. That means buyers should be buying. Well, that's exactly the opposite is happening, because the reason the inventory is up, and the statistics shows that, according to Redfin, it shows that 27% of homes still selling above list price, which is normal. So there are some homes selling list price, like I just gave you my example. We're almost 200,000 over list price. But what's happening here is inventory is up 15% year over year, and it's still low historically. So the other fact I want to move on to is the interest rates and the Feds. I mean, somebody mentioned to me today that, hey, the Feds are going to drop the rate. I'm not going to buy that. I'm not going to believe that, because number one, and not getting political, whatever this administration says, it can happen today and be gone tomorrow. So the administration today is forcing the Feds to cut the rate. Is the Fed going to budge? Somebody mentioned today that the Fed is going to budge, but I'll believe that when I see the rates drop, and if the rates hang in there for a month, 2 months, 3 months, 4 months, which gives time for the buyers to buy and readjust to the new inventory, readjust to the new pricing, readjust to the new interest rate, and there's going to be a frenzy of buyers moving in. As soon as the rates, drop near 6%, guess what's going to happen? And I can guarantee you this will happen. Within a few short months, if the rates drop to 6%, home prices are going to skyrocket. We're going to have multiple offers. We're going to have the same market we had 2 or 3 years ago, because all the buyers who are waiting to get qualified, because now they cannot qualify, they cannot buy, they're out marketed from the market, they're going to come in and it's going to drive up the prices. So it's not really going to help. That interest rate is going to be temporary, and guess what? The Feds may just have to increase the rates again. So I'll believe the rates will drop when it drops, and I won't believe any administration or any news or any expert out there saying that it's going to drop. So because I'll believe it when I see it. They've been saying that for the last 2 years. It hasn't happened. In fact, the opposite happened. When the rates went up from 2, 3, 4% to 6 and 7%, it's always going to drop in 2 months, 3 months. Guess what? It went to 7.75%. At peak, it was almost 8%. Never went down and hasn't come down since. It might have come down for a couple of weeks, but it went up again. So when I talk about rates, I'm talking about rates that are going to stay for 3 weeks, 4 weeks lower, so that the buyers have a chance to find a house. If they lose a home on a multiple offer, they have a chance to buy another house. So I'll believe it when I see it. Until all the experts say, all the news media says, all the administration say it's going to drop, I just won't buy it. So the interest rate pressure goes both ways. Recession can lower rates, but also it can lower the home prices. And then the Fed has major influence on mortgage rates through the bond buying. And I won't get into the treasury bills and the bond market, how they control, and the inflation and etc. I won't get into that. Rates are what they are, and I'm not going to talk about what's going to affect it up or down. I'm not going to try to be an expert on the rates. So let's kind of move on. So I want to go back to the topic that I talked about. And in the meantime, I just want to remind you that if you have any questions or comments, make them. I'll try to find them, and I can see them when you make a comment, and I'll try to answer them right away if I see it. I should be getting a ding when somebody comments. So I mentioned earlier that the topic is you can't sell your home at the same time you can't afford to stay in the house. That means you cannot move. What's going on? But here's what's going on. I did a video about this a month ago, but I'll kind of briefly explain to you what's happening. Let's take an example. Let's take my example, and this is an assume, right? As I mentioned earlier, I have a lot of equity in the home. That means I have a lot of money, but it's paper money. I don't have the cash. So if I decide to move, let's say I want to move to Florida or someplace else, San Francisco, I can sell my house. I can get the price. The problem is when I buy another house, and of course I have a nice house, so I'm going to buy something that's decent or single story or something newer, and I want a better house than what I have. Obviously, that's why people move, is to have a better life, whether it's a smaller house or a newer house, or a house with a yard, or a house with a view, or a house with a pool, or a house with a no pool, etc. I want a better house than I have right now. So the first dilemma is, if I sell mine for $1 million, am I going to pay higher price when I move to certain areas? Of course, if I want a cheaper home, I can move to Texas and I can move to Florida, but I don't want to go there. I want to stay near my kids. And I'm just giving an example, pretending I'm a seller and a buyer. I want to stay near my kids, or I want to stay near my parents, or I want to stay near my work or the hospital. So I'm going to find something close by. So when I find something close by, I'm going to pay a higher price. Not only am I going to pay a higher price, and assuming I sell $1 million home and I'm going to buy something for 1.5, right? First of all, I'm paying $500,000 more, so my property tax is going to be high. Second of all, if I sell at 3%, I'm going to pay something, I'm going to buy something at 7% or 6.5% or even 6%, but it's still higher than my 3%. But let's say I'm okay with it. I train my thought that, hey, market is what it is. There's no control over the home prices. There's no control over the interest rate. But here's the dilemma that's stopping a lot of people. And there's 2 or 3 things. The first thing is your property tax. Of course, in California, the property tax is controlled. It's usually 1.1%, and it can only increase by a certain amount. It is near the CPI, the Consumer Price Index. But other states like Texas, Florida, Arizona, other states, a lot of states, they can double, triple, and they have double, tripled, quadrupled property taxes. So that means that if I buy a bigger house, my property tax is going to jump sky high. At the same time, the insurance, because when I qualify, they're going to look at the insurance, and now my insurance has gone up 20-30%. It's going to go up another 22% next month. So because that's just how it is, everywhere the insurance is going up. In fact, let me show you a slide. Since we're talking about insurance, I'll stop this screen and I'll share a slide here, because I don't want to keep talking. I want to show you some things as I go. Okay, so this is an article that came out on April 30th by Fortune. What I was getting at is insurance is going sky high. Some areas it's doubling, tripling, quadrupling. Mine has gone up 20%. It's going to go up another 20% because the state insurance commissioner in California has approved State Farm to increase premiums by 22%. And I understand Allstate or AAA just got an approval to increase their insurance by 30% in California, right? So if I'm going to buy an insurance, I'm already paying high insurance, but when I buy another house, and depending if it's in a flood zone or a fire zone or earthquake zone or some other zone, whatever zone they want to make it, they can call whatever zone they want, right? My insurance is going to go up. So now I'm paying high home price. I'm paying high interest rate compared to my 4%. I'm definitely going to pay higher property tax. I'm definitely going to pay higher insurance. So all of a sudden, my payments going from, let's say if it's $3,000, it's going to jump to $8,000. The question is, can I afford it? The second question is, can I qualify for it? So when I say that a lot of the sellers want to sell but cannot sell, because let's say I'm on fixed income and I'm semi-retired and I don't make a lot of money. So now when I want to buy this house, I can't buy because bank's not going to give me a loan, because I can afford the principal and interest, but the taxes and insurance, because they're so high, knocks me out. On top of that, if there are newer homes, and there's a lot of newer homes in Orange County area or townhouses or other areas, if they have association fees, they've gone up proportionately, because as the insurance increases, the HOA increases. So now I have higher HOA, so that knocks me out. So here I am, a seller who wants to sell and buy, but I cannot do that because I cannot qualify. Now, let's go back to where it says, the title says that, nor I cannot sell, nor can I afford to stay in the house. And why is that title so important? It's important because in certain states, like let's take, for example, Florida, and this is a real case scenario where I've talked to a lot of the agents, I've talked to experts, and there's no experts, and I don't call myself an expert. I'm just relaying the information that I come across, and I feel it's legit, that I'm sharing with you. So on one hand, I give you my example where I want to buy, I want to sell and buy, but I can't. And of course, that's just an example because of this case scenario where I can't qualify. The flip side is I cannot afford to keep my house. I can barely hang on to it. In fact, I just did a video last week. Maybe you want to look it up. It's my video. You'll see it. It's right now. It already has almost 20,000 views on it the first day. It talks about I cannot afford my mortgage payments. And that's exactly what's happening. People who've owned their home 2 years ago, 3 years ago, even 10 years ago, 15 years ago, today finding out that they cannot afford that mortgage now. They could afford until now, but the last 1 or 2 or 3 years, they cannot afford it, because guess what happened? Even though these buyers and homeowners had a fixed mortgage rate, 30-year fixed, PITI, principal, insurance, tax, and interest, or it's principal, interest, tax, and insurance, They were on cruise control. They're paying every month 2,000, 3,000, 10,000, whatever it is. Then guess what has been happening last 2 or 3 years? Last 2 or 3 years is this is what has been happening. And if you can see the slide, I'll refer to the slide now. I was going to mention it earlier. What's happening is, let me go back here. Home insurance. Where is that slide? There you go. Home insurance prices will spike 8% in 2025, with some states seeing a 27% rise. And that's a good insurance rise. I just told you that mine has, or I mentioned to you that mine have gone up in the last 2 or 3 years, 20, 30%. It's going to go up another 22% because the state insurance commissioner approved State Farm to increase rates by 22%. So if you look at it, it's almost 50%. So if my mortgage payment was 2,000 a month, and let's say the insurance portion was 500 out of that, now add another 500 times 40%, another $200. That means my insurance went up $200, just like that. But so if your interest rate, principal interest tax insurance had been steady and going up significantly lower, now it's jumping. So a lot of people who cannot afford to make those payments, there's a lot of defaults out there. There's a lot of foreclosures happening. We don't see it because they're not talking about it, but it is coming. Foreclosures are coming. The banks are keeping it quiet, and banks are negotiating because there's a lot of equity in the home. They're making some things and deals whereby they can make the payments. So the insurance is the biggest culprit in if we lose homes. Property tax and insurance is going to be a big cause where homeowners are losing homes. So getting back, sorry if I'm talking a lot, but I'm trying to drive a point here. Getting back, for the people who are owning the homes, let me take an example in Florida. For example, there's a homeowner in Florida, many homeowners in Florida. They had the hurricane 2 or 3 in a row, devastating hurricanes. They have a lot of damage in the homes, roofs, windows, flooring, yard. So what happened? They've been staying there. A lot of them are seniors. A lot of them have owned their home for 12, 13, 14, 20 years. They've been making their payments just like soldiers. They're doing their due diligence. They're making their payments. They're living a life. And then hurricane hits. There's a lot of damage. But guess what else happens after the damage? And after the collapse of that building, the insurance rates went up. All the condos that are 3 stories or more were reassessed by the state. And there's new laws right now. So if it's not earthquake standard, or if it's not up to fire code or hurricane code, or et cetera, they slapped reassessment fees. The state asked them to fix, let's say, this 20-story condo. You got to do this and this and this and this. So the condo association got slapped with, let's say, $1 million. And let's say there's 50 condos in there. So the $1 million were slapped onto these 50 condo owners, 20,000 a piece or whatever, and they had to pay that up front. So here I am, a senior living in Florida for the last 15 years, making all my payments. Hurricane hits, big damage. I don't have money. Why don't I have money? Because I'm on fixed income. I've been staying here for 20 years. I have a lot of money, a lot of equity in the house, but I don't have money in my pocket. So now I don't have money to fix it. Problem number 1. Problem number 2, because the home values keep rising and rising and rising, the government is raising your property taxes. So now I have to do repair bills. Now I have to pay my higher property tax. But because of all these damages, insurance companies, should I say greedy insurance companies, raise your insurance. So now you're paying higher insurance companies. And because you're in a condo or you're in your community, you have association fees. So now your association fee is going up. So all of a sudden, I've been paying $2,000 diligently every month, on time, never been late. Now that payment's $2,500, $2,700, $3,000, $4,000. I'm on a fixed income. I don't have any money. The money I have is in equity, which means I cannot afford my own house. I can't afford to fix it. I cannot afford to make payments. I cannot afford to make those property taxes. But did I mention medical payments? Did I mention your electric bills? Did I mention your gas bills? Did I mention your auto bills? What has happened in the last 2 or 3 years with the tariffs, with inflation? Everything has gone up. food, eggs, gas. And I mention this all the time because this is a true fact. So all of this is creating, especially people with fixed income or not extra income, they can't afford to stay in the house and they cannot afford to sell a house. And this is the situation we are in. Like I said earlier, we are in a frozen market. And make a comment, where do you feel or do you see any change is coming, in the sense for a better change? I don't think the real estate market is headed in the right direction. I think it's going that way, but it should be going that way. Home prices are still higher. The prediction is that home prices are still going to go up. Property taxes are still going to go up. Insurance is still going to go up. Home prices, regionally speaking, may be low, but overall they expect 2025, 2026 prices to go up. So everything is going up. Nothing's coming down. So there's going to be a bottleneck. Here's a seller cannot sell, so there's low inventory. But on the other hand, there's inventory because more homes on the market, but the buyer cannot afford to buy. So there's a standoff. I want to sell, but I can't sell because I want the price. But sellers are asking for more money, so the buyers are not going to buy because they don't want to pay the higher money. So that's what's happening. And the other thing I want to talk about is a very important thing I want to mention to you. Let me see how I should put that so that you get an idea what I was talking about. When it comes to inventory, right now there's a lot of vacant homes. A lot of the sellers, one of the other reasons why inventory was up, and let me see if I can show you. I'm going to put this on the screen before I talk and mention it. It's called shadow inventory. Let me put it up. Let's see, present, stop this screen and share shadow inventory. So the other reason that the inventory is high and is going to keep on going higher is because of shadow inventory. Now, what is shadow inventory? The shadow inventory is the inventory that's not in the market yet. I'll give you some example. A lot of the sellers over the last few years pulled out equity from their home and then kept the home, either rented it out or kept it vacant as an investment and bought another house. Now that they know that things are going expensive and property tax is going higher and they feel like the market is peaking out and it's not going to go higher, all that inventory is going to come on the market. All of a sudden it's going to flood the market. It has already been flooding the market. Quote, when I say flood, I don't mean it in a bad way. It means they're all coming in. And we've seen the higher inventory. Part of the reason of the shadow inventory, of the inventory increasing, is shadow inventory. If you look over here, this article came out on April 9th, 2025. It's from Wolf Street. It says here that the shadow inventory of vacant homes suddenly piles on the market in Texas. New listings, active listings spike to the highest for March in many years. Houston, Dallas, Fort Worth, Austin, San Antonio, even as sales plunge, vacant homes pile on the market that were held off the market during COVID. Same thing is happening in Florida. Let me read further. It says here that the inventory of vacant homes is coming out of the woodwork in Texas and other states, but they're focusing on Texas here. Even as sales have plunged and buyers have lost interest. New listings in the state jumped by 22% in March from February to 45,000 homes, the biggest number of new listings for any March in data by Realtor.com, going back to 2016. What they're saying is the highest inventory jump in the last 10 years or 9.5 years. Excuse me. Compared to 2019, the new listings rose by 14% and compared to 2018 by 17%. But back then, buyers weren't on strike and sales hadn't plunged. Remember, prices were much lower, interest rates were much lower. Right now, there's a high inventory, but the rates are high and everything else is high, and buyers are just holding off and they're saying, heck no, we ain't going to pay 7% or higher price, at the same time pay higher property tax and higher insurance and higher medical bills. So as we can see in the chart, in March, New listings peeled away from the crowded field. The fat red line with big red boxes, this one here, in all charts below denotes 2025. The dotted red lines denotes 2024. So this is the inventory 2024, the trajectory. Look at the trajectory right now. It's much higher, way higher. So this gives you an idea. Let's look at the active listings. If you look at the red dots here, the graph with the red squares, it shows the active listings. And we're talking about Texas right now as an example. But different states, different things are happening. Florida, same thing is happening. Arizona is flooded. Pennsylvania, some areas of Pennsylvania is flooded. Chicago inventory is flooded and home prices are actually dropping in those cities that I mentioned. So 2025, same thing is happening. Active listings in Texas, existing homes. This does not include, by the way, this does not include new homes. And we're not even going to talk about it. But when it comes to Texas and new homes, there's a lot of new homes out there sitting. In fact, if you're a buyer in Texas, a lot of the new home constructions, they're giving away a lot of incentives, helping with down payment, helping with sellers' closing cost, helping with upgrades. So a time to buy in certain states, new homes is a time right now because that's what's happening. Furthermore, let's talk about the shadow inventory. Shadow inventory is coming on the market. In 2021, active listings had collapsed, but demand was huge and people were buying homes hand over fist, paying whatever and seeing how prices exploded. They didn't put their old homes on the market, but kept it vacant to ride the price spike up all the way. I mentioned this to you earlier. These vacant homes held off the market for speculative purposes were the reason inventory collapsed back then and sales soared, and they formed part of the shadow inventory. And last paragraph I'll read further is that now those vacant homes are coming on the market, but without their owners having to buy new homes because they've already bought a home a year ago or a few years ago, which now causes inventory to balloon and sales to plunge. The reverse of the effect it caused in 2021. When inventories collapsed while sales soared. Well, you know, the basic rule of economics, the more homes there are, the less prices there are. And of course, when we say new homes, there are more homes, more inventory, but it's still lower than your normal market that we had. So hopefully it gives you an idea of what's happening in the market, why there's a standstill, why we're at a turning point in real estate. If you talk to some people, they say, oh, market's going to crash. There's going to be a bubble. There's going to be a 2008 repeat. I personally don't think that we are going to see a repeat of 2008. In 2008, we have inventory supply of 11 to 12 months. Right now, we have 3 months supply. That means it's a very healthy market. In 2008, people had zero inventory. They refied, pulled the money out, bought elephants and horses and boats and took vacation, bought fur coats when they shouldn't have. And then when the market price went down, they had too much debt. And that's why there was a crash and people could not sell and the banks took over. What's different this time? Well, the number one thing different this time is what we call equity. All the homes that have sold in the last 2, 3, 4, 5 years, including last year, prices have gone up, which means most of the homes, I would say 90 to 95% of homes, have a lot of equity. So even if somebody loses a job and cannot make the payments and sell their home and have not paid in a year, they can still sell the home. They have enough equity to pay the bank. So the wave of foreclosure is not coming, but we are going to see a lot of home sellers, my opinion, let go of their homes because they cannot afford it with high equity. In fact, a lot of vacant homes in Florida, there was a glut of inventory just a few months ago because nobody was buying. A lot of damages. HOA, Homeowners Association, HOA was too high. The assessments were too high. So all of a sudden, they have like almost 40,000 vacant properties in Florida. Nobody was buying it. So guess what happened in the last 2, 3, 4 months from talking to other agents? Contractors, developers, Sharks, what we call people looking for homes buy low, flippers, those who buy and fix it up and flip it, and investors. All these guys bought a lot of these homes at 20, 30, 40% below market. Yes, some of these homes needed a lot of work, landscaping, roof, windows, flooring, bathrooms. So they got it at a cheap price. But if I'm an investor, if I'm a contractor, if I'm a developer, if I'm a shark, I know what I'm doing. I can fix it up. If it takes me $100,000 to fix it up on retail, a contractor can do it for $50,000 or even $40,000 because they have the crew, they have the supplies, they have the machines. I don't even have a hammer in my house, so there's nothing I can fix. So I'm going to have to go buy a hammer first to fix something. So these guys know what they're doing, and they've already gotten a good deal, and they're flipping. And some of the homes, now that they're fixed and they're in good shape, inventory and home sales have gone up a little bit compared to a few months ago, but still down. So there's a lot of things happening on the market. Let me stop screen sharing. The other confusing part that I want to talk about, which is important, is about what's happening with the commissions when it comes to the buyer's agent. And I want to just touch on this a little bit because there's a lot of confusion. In fact, the buyer that we talked, I mentioned to you where we got the home, almost got the home for almost $200,000 over list price. We had to explain to them how the commissions work. So as you know, in August 2024, there was a lawsuit settlement by National Association of Realtors. And my opinion is that's one of the biggest mistakes they made, or biggest disservice they did to their own members, the realtors like us. But that's another podcast, another live. We won't talk about it. But I'll give you my opinion, which I just did. So what happened was there was a lawsuit. So now, before that lawsuit, the sellers paid the commission to the buyer's agent and the seller's agent. Let's say it was 6%. So typically 3% goes to the seller's agent and 3% goes to the buyer's agent. With the lawsuit now, what happened was the seller cannot offer the buyer's agent commission up front. So the seller's agent can only pay the seller's agent. But if I'm a buyer's agent, first thing I have to do is I have to sign a contract with my buyers, and this is nationwide, not California. I have to have a buyer's agency agreement that I'm going to work with the buyer. I'm going to show the buyer homes and how much commission the buyer is going to pay us, whether it's 2% or 3%. So I have to have that written. Once I write an offer, then I go to the sellers. When I make an offer, I can say, hey, I'm offering you $1 million. I'm offering you 100,000 more if you're in California. But at the same time, I want you to pay the buyer's 3% commission. Buyers does not have enough money because they're using it all for the down payment. So with the permission from the buyer, written permission or written disclosure, I can ask the seller, and if the seller agrees to pay the commission to us, which they typically do, it has been happening. It may change, but so far from what I understand, 90 to 95% of the sellers are still paying the buyer's agent commission. But before you can get paid, the buyer has to sign how much commission you'll get paid. They will agree to pay. That means the buyer will agree to pay. But we explain to them that we can ask the seller to pay. And if the seller agrees to pay that, the buyer has to agree that it's okay for the sellers to pay. So it's a little bit confusing, but the bottom line is the seller has to disclose to the buyer and the buyer's agent that the sellers are paying the buyer's agent as well on top of the seller's agent. And that has to be written. It has to be in the offer when you present it, not after, but at the time of presentation. Prior to the lawsuit, the buyers didn't know how much the buyer's agent were getting paid. They didn't know at all. But now they know from the get-go how much I'm going to get paid, whether it's 2% or 3%. So when it comes time to negotiating, that commission plays a big factor. In fact, in the offer that I talked earlier, where look at how funny this is, and look at how, should I call the seller greedy? The seller was asking 1.1. We convinced our buyer to pay him almost $180,000 more. We asked for 3% because we're a team of buyers agents. We're a couple of buyers working together, working real hard. So we asked for 3%. Guess what? The seller, should I call, quote, greedy seller, only paid 10%. did not want to do termite work, did not want to do any repairs. I mean, give me a break. You're getting 100,000 more. Can you at least pay $20,000, $30,000 commission to the buyer's agent who got you that much? But that's another new live stream we'll talk about some other time. But at least you understand what's happening right now, that the commission structure has changed. The buyer has to understand at the get-go, when you write the offer, how the commissions work. They are liable to pay the buyer's agent. That's what they have to understand, whether it's 1% or 2% or 3%. But when I work with the buyer, I explain to them, look, I'm going to make you sign a 3% commission. You're going to pay me. But don't worry, when I write the offer, I'm going to ask the seller to pay. And if the seller does not pay, I'm going to find somebody who's going to pay. So typically, like I said, at least in Southern California, from what I've seen, most of the sellers are paying 2 or 3%. I've hardly come across anybody, or I have not come across myself where they say, hey, no, you get it from the buyer. So I think most of them want to pay, because as the inventory goes up, there's more competition. So the seller better pay the buyer's commission, or they're not going to sell the house. Like if I have a 3% commission, and this is my past client, by the way, I'm not going to have my past client pay me 3%, because they're my past clients, and typically the sellers pay for it. So I'm going to find a seller. If this guy doesn't pay me, I'm going to find another guy, another seller. That's just how it works. So anyway, let's move on from there. So I want to talk about what you should do if you're a buyer or a seller, and if you're stuck in the situation, is what are some of the things that you want to do. First thing I tell everybody is don't chase the market. Don't try to time the market. This is not a stock market. This is not crypto. If you are ready to move, make the move. People ask me, when's the best time to move? When's the best time to buy? Well, the best time is not when you chase the market and you think the market is right, because you don't know when the market hit low until after it hits the low. It's like the stock market. Huh? When's a good time to buy Tesla? Well, it's at 236 right now. So you should buy it when it's low. So let's say it drops to 200 and comes at 210. But you're still paying 210. You missed the low. So you cannot time the market. You cannot chase the market. You won't know that the market is low until after. Because how do you know something that's not even there? You find out after the fact, not before. You can't predict it. I've never seen in my 30 years of real estate, nobody predicts anything. Yeah, there are gurus saying, oh yeah, I told you this was coming. Who predicted the 2008 recession? Nobody did, right? Who predicted the COVID and what it's going to do? Who predicted the 2 or 3%? Nobody did. Who predicted the 6 and 7%? Nobody did. Who predicted the property tax will go up, insurance will go up, HO will go up, and it'll be a factor in buying? Nobody did. But after the fact, everybody will become an expert. And so I told you so, I told you so. So what I'm trying to say is, if you're thinking about buying, buy when you are ready, willing, and able to. Is this the right time to move? Are you ready for the job transfer? Are you ready for the bigger house because you have babies coming, or your parents are moving with you? Are you ready to retire and get the single-story home? Are you able to? Do you have the down payment? Can you qualify with the new property tax, new insurance? Ready, willing, and able to. And are you willing to do it? Then do it. But don't chase the market saying, oh yeah, I'll buy when it's 5%. And when the market, the $1 million home that we sold is going to be $800,000. It's not going to happen. So be prepared, be informed. Don't try to chase the market because nobody's had been able to do it. If you know somebody who did it, I sure like to talk to him and get some pointers from them. Let me know, make a comment. So, and then shop patiently, wait for the right deal. So I'm not saying go out and go buy whatever it is out there. You know, you want to find something maybe you want in the right school district. You want something, you want a 2-story, but you want a single-story home. Or what I meant is you want a bedroom and bath downstairs because your mom's going to move in and she can't go up the stairs. Or you want something with a yard because you like gardening. It calms you down. So find the house that you want, but don't be too picky. But at the same time, get what you want, because this is a big, big, big investment. It's one of the biggest investment you'll make. Don't rush it, but get what you want. But at the same time, don't go be too picky, because like the saying goes, you know, there's no perfect home. If you can find a home that has 8 out of 10, you're doing fine. I tell my clients in a joking way that, hey, there's no perfect wife or there's no perfect husband. 8 out of 10 is good. Same thing with the house. 8 out of 10 is good. There is no perfect home. Absolutely none. You might have a perfect home, perfect layout, perfect four walls. But what if there's a dog next door keeps barking 24 hours a day, or you have nosy neighbors, or the house is perfect and right behind is a commercial building and there's a lot of noise, etc. So there's no perfect home. I haven't seen in 30 years anybody say there's a perfect home. If you find one, please make a comment. Would like to see that homes personally. Even if it's out of state, I'll go take a look at it. So the other thing you can do is, if you're having a hard time making payments, insurance went up, the taxes went up, see if you can refinance. If you have high debt, maybe you have a lot of credit cards because your house payments were so high and you have credit cards with a balance of 30, 40, $50,000. Yes, there's people out there, homeowners with that much of a balance. Then you may want to think about refinancing. Yes, you might have 4% and 7% is the current rate, or 6.8% the current rate. But if you're paying 25%, 20% on credit card bills, you may want to combine them and pay off. So 7% is better than 25%. So kind of talk to an accountant, talk to your lender, shoot me an email or direct message me, and I'll have you talk to a lender or a realtor in your area, things like that. So anything you can do, please do so. Anything that can help you, it'll do so. The way you're thinking, the way you have your situation, there's a lot of people in that situation, and more people, and I don't want to sound negative, but more and more people are getting into hot water, are getting into trouble these days. Then people are saying, oh, I bought a house, I'm so happy. Now they're saying, oh, I bought a house, now I'm in trouble. There's a lot of buyer's remorse. There's a lot of home seller remorse. There's a lot of debt out there. There's a lot of concern about the economy. There's a lot of concern about the administration. Yes, there's a lot of people who love the administration. A lot of people who don't like the administration. Yesterday, there were bombs going out in Iran. There's bombs going in Ukraine. There's things happening. So people are very nervous right now with the inflation, with the economy, with the recession, the rising prices, uncertainty, unemployment, etc., etc. I'm not sure what situation you're in. Please make a comment and we can share each other's thoughts. So at the end of the day, I'm going to call it quits right now. I have another appointment coming up. So I'm going to end this call. If you want to hear about some topics, please make recommendations. I will be back here at 4:30 California time. I'm in Orange County, California. My name is Mike Patel. Thanks for watching. Your comments are more than welcome, or any questions. Thank you for watching.